Hello guys, today we are going to talk a little bit about your hardship letter. So when you're applying for a loan modification, you really want to think about what the purpose behind your hardship letter is, as opposed to if you are applying for either a deed in lieu or a short sale, the purpose is kind of different. So generally understanding what you're trying to convey with your hardship letter is important. When you're applying for a loan modification or a repayment plan or something to keep the home, you're trying to let the bank know that while you underwent financial hardship, you since then have recovered. You're in a good financial position now. If you're applying for something to get out of your debt, like a short sale or a deed in lieu, or something where you're trying to get the lender to agree to just let you out, you want to make your financial hardship sound like you have not recovered at all and that the mortgage payments are very unaffordable. So before you actually sit down to write your hardship letter, ask yourself, what am I trying to do? If you're trying to stay making your hardship letter sound as if you have this disastrous ongoing financial hardship that is not resolved is not the way to go. If you're trying to get the bank to agree to settle a debt deficiency, you want to make your financial hardship sound as long and as ongoing as possible. So there are 5 main common financial hardships that banks recognize as reasons for default, and we're just going to kind of walk through those. The first of the 5 is job loss. This is the most common reason people fall behind on default, and it's also the most cut and dry. So if you're someone who, after you listen to this video, realizes that you have multiple hardships going on, like multiple of the 5 we're going to talk about, but you did suffer a job loss in some way that caused you to default on your mortgage, you want to choose job loss as the hardship reason to focus on. The reason being, it's really easy to demonstrate, you were working, you had pay stubs, and then at a certain point, your employer gave you a termination letter, or you were laid off, or they, couldn't keep you on anymore, and it's pretty easy to prove. It's also just a very valid reason as to why you were able to make a payment and then you weren't. So job loss is the most common one, and it's a good one to use in the event you have multiple going on and you feel like you kind of need to simplify and pick one. Pick job loss. What's important to understand about job loss too is even if you were fired, that still counts as job loss. Sometimes I think homeowners feel hesitant to tell the banks that they were fired, but you shouldn't. You should just use the phrase laid off and let them know that you lost their job. The banks are really just looking to make sure that the financial hardship you underwent is genuine, and genuinely being let go from your job is a valid reason for you to have defaulted on your mortgage. So the first one's job loss. The second one is divorce or separation of a borrower. So, if you're married and then you go through a divorce, the household income is usually split in half. And then, borrowers have to face trying to make all of their monthly bills, often on their own. That is a valid reason for hardship. If you are in a situation where you are on your way to divorce, which would be separated, but you don't have a valid divorce going yet, you have to explain that to the bank. You use the word separation, and it's worth it to tell them in the hardship letter that you are, intending to move forward to a divorce. So even if you aren't formally divorced, but there are 2 households and you're separate and you're on the path, if you're in the process of applying for a loan modification, that counts as a hardship reason, but you might have to explain a little bit that while the divorce isn't legal, you're on the path to separation. Death of a borrower, of course, if somebody's alive, they're paying their mortgage. If somebody passes away, they can't pay their mortgage anymore. So death of a borrower is a completely valid hardship reason. What you'll want to attach to the back of your hardship letter is the borrower's death certificate. So this situation applies usually when there's, a married couple or a couple that's together, one of them passes away, the surviving borrower on the loan then falls into default and needs some sort of assistance. That would count as death of a borrower. If you're applying for some sort of short sale or deed in lieu as the personal representative of an estate, your hardship reason will be death of the borrower. You should be able to present the probate documents that give you the legal authority to ask for the short sale. And so in the hardship letter, you just write, the borrower passed away, that caused the hardship, here's the proof, you attach the death certificate and whatever probate documents you have to show the bank that you have the legal right to be working on the property. Okay, so we've got job loss, divorce, separation, death of a borrower. Our 4th hardship reason is illness of a borrower. So the first thing to note here is that banks will accept a broad interpretation of illness. So illness doesn't just mean some physical medical illness. If you are undergoing mental illness that requires expensive treatment or has in some way impacted your ability to bring in income, it's important for you to understand that the way you explain illness will help you get through the financial hardship verification process. And I personally have had several clients where mental illness is a real thing that affects the household income, and it should be counted here. But you will have to maybe get into some of the personal details that you maybe don't want to share with others. But depression, anxiety, PTSD, these are things we see coming through, and they do count as illness of borrower. Obviously, there are more straightforward illnesses where, if you're sick and you go to the hospital, or you receive, maybe a cancer diagnosis, or you break a bone, or you injure yourself in a way where you both have medical bills and can't immediately go back to work, that also counts. Illness of the borrower sometimes can get expanded also to illness of someone else in the household. They don't call it illness of someone in the household, but you can expand the illness hardship reason to someone else. So if you're a parent and you have a child who becomes sick and suddenly expenses are high, or they require time that takes away from your time of working, or if you have an elderly parent that suddenly becomes sick and requires a ton of attention, you're going to want to explain how this illness relates to the financial hardship in your letter, and you use it under this illness of borrower financial hardship label. The fifth reason banks offer as a valid financial hardship reason is what they call unforeseen increased expenses. What that means is something has popped up that you weren't expecting that caused, prioritization of income to be diverted to these unforeseen expenses. I'm going to say right now, this is the worst one to use when you're trying to get your hardship letter through the financial verification process. So don't mention unforeseen household expenses if you can fit your financial hardship into any of the other 5 we discussed, because it's subjective, right? And banks have the ability to kind of review what you're saying the unforeseen expenses are and decide whether it was valid for you to worry about those instead of your mortgage. And so you don't want to put yourself in a position where you're kind of leaving yourself up to what the banks want to decide or what the banks, think is valid. So I always, with my clients, I tell them, don't talk about unforeseen expenses or increased expenses unless there's nothing else. There's no job loss, there's no illness, there's no death, there's no divorce. If you don't have any of those things, then you probably will have a valid financial hardship reason around unforeseen expenses. I think it's also worth mentioning that there are some unforeseen expenses that banks view as very valid reasons to default, and some that kind of are less valid. And so I'm just going to quickly run through, if you're going to use this unforeseen financial hardship expense reason, I'm going to run through what you want to phrase it as and the ones that seem valid. So home repairs or costs that affect the habitability of the home. So roofs collapsing is a common one I see, or suddenly there's a big foundation issue or black mold. Anything going on with home repairs that make it so if you don't prioritize fixing that, your home will become not habitable. That's a great unforeseen increased expense to say caused the financial hardship. If you have a family member or a personal, medical injury or emergency, sometimes people suddenly have, a family emergency on the other side of the country that they have to suddenly fly to and stay for a couple weeks and pay for lodging, things like that, where somebody's actually having an emergency is a good one. Less persuasive unforeseen increased expenses are going to be kind of smaller expenses that banks might think would be reasonable for you to be prepared for. So things that I've seen banks not like in the past have been like car repairs or, smaller increased spending, like suddenly having to purchase something, under $500. Any sort of entertainment costs, you want to not talk about that. Any sort of shopping or eating out or anything that will constitute discretionary spending might cause you to have more questions asked about your financial hardship. So use one of the other 4 financial hardship reasons if you can slot your financial hardship into one of those, that should be your financial hardship. If you are forced to use unforeseen increased expenses as your financial hardship reason, make sure that you are thinking through how you're going to explain them so you don't end up in a position where the banks want to ask more questions or they have some sort of issue with where you're spending your money. For homeowners in Washington, if you need help kind of talking through how to draft your hardship letter or how to kind of put all of your hardship information together, give me a call. There's going to be a couple more videos about the hardship letter, a couple more things to watch. So if you are watching this and you know you're going to write your hardship letter and this was helpful, make sure you watch the other couple videos too so you write a perfect hardship letter. Thanks.